This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:14 p.m. on July 21st, 2019. This is the Sunday weekend strategic webinar. Looks like we don't have any attendance yet. Must be the hot summer out here on the East Coast, and just overall, it's a summer evening, so people are, enjoying their time instead of sitting on a strategic webinar, which is totally understandable. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. I'll go over a couple of important pointers about what's coming up this week, go over a few of my thoughts based on the technical charts, and then we'll basically wrap up for the evening. The webinar link has been posted in the chat room and on the real-time Twitter feed, and anyone can click in and walk in at any given time. On that note, let us begin. Let's move on to what is going to be happening this week. And first and foremost, we are going to take a look at the economic calendar, which we have been concentrating on very much so, because this is extremely relevant as catalyst for the market volatility that we encounter every single week. So starting with that, we are going to start off Monday morning with the Chicago Fed National Activity Index, which is an important number, and that will be coming out right before the market. So the number needs to be somewhat stronger or moderately soft, nothing too dramatic on either side. A slightly moderate to softer number will be helpful, because the markets are betting that the Federal Reserve on July 31st, that's next week, not this week, but the following week, probably one of the most critical Federal Reserve, FOMC, Federal Open Market Committee meetings coming up on interest rates, that they will be cutting at least a quarter of a percentage point, what they say 25 basis points, and they might even cut 50 basis points, which is half a percentage point, which would be fantastic. So we shall see. So if this number is very hot and very strong, the Chicago Fed National Activity Index, that lessens the probability of a 50 basis point or half a percentage point cut. It's almost baked into the market right now based on all the comments from Fed governors, but most importantly from Fed Chairman Powell, that they are going to cut rates by a quarter of a percentage point, what they call an insurance cut, so the economy keeps on moving along. So last week, we had a lot of Fed governors say a lot of things, and the last one that spoke right after the market closed on Friday basically said that he doesn't see a need for a rate cut, but each their own opinions. But the main guy, Fed Chairman Powell, has openly said in his own words that he is looking to give the U.S. economy a little boost by cutting rates by a minimal amount, which is quarter of a percentage point. So, saying all that, we will start off Monday with that. Then Tuesday comes, we have the house price index. It's important, nothing that crazy. Existing home sales are important. We want a number which shows slight growth, or if not slight fall. It doesn't seem to be affecting the markets in a major way. So that is fine. Then we have the regular bond offerings, and those auctions are also watched to see the demand for U.S. and foreign investors looking to buy U.S. debt and locking in these lower yields that are coming up. The United States still has the highest yield or interest rate on government bonds, which are fully backed by the U.S. government, full faith of the U.S. government. We have never defaulted on that. It is still the highest in the developing economies. The European bonds, believe it or not, are flat to minus below zero, so obviously they're not as attractive. Saying all that, we go into Wednesday, where the inflation numbers start coming out. This is a Purchasing Managers Index, very important numbers, the cost of raw goods, what purchasing managers in U.S. corporations are doing. This number will be very closely watched. That's at 9:45 a.m. New home sales, again, like explained before, this is something which is not that big a market mover. Then we have the bond auctions. We go into Thursday with durable goods orders, which is a very important number, shows the demand for durable goods, which basically goods that last more than 6-7 years, refrigerator, cars, and all that stuff, and heavy stuff. And that is something that is important, that is watched. We want the durable goods number to be somewhat in the moderate range again, or slightly higher, showing that the U.S. economy is moving along. Demand is strong. International trade in goods, important number, nothing that crazy. Jobless claims, important number. Overall, U.S. job growth has been moving along steadily higher, and so that is something that is important, but not that critical. Hi, Trina. Are you connected?
Yep. Hey, Frank.
Oh, okay, sounds good. I started off because people are going to be filtering in, but I just didn't want to wait around too long. Anyway, so then we go into at 11 a.m. the Kansas City Fed Manufacturing Index. Not that critical, but something to watch for. Then we have lots of bond auctions coming through. Then we go into Friday, the most important economic number for the week that we have to watch out for, and the markets will be anticipating a slightly softer GDP based on the weaker economic numbers that we have gotten over the past month, and that's the gross domestic product of the United States of America. This gross domestic product, some people, it's a wide range, can be anywhere from 2% to 3% plus. The last number that we got was, I think, 3% plus. So I don't know. I have no idea whether or not they're going to beat that in a big way, but this number is very closely watched. If we get a slightly weaker number, it again bolsters our case for a bigger rate cut by the Federal Reserve, because the slowing economy U.S. economy is not what they want to see. They've always been there to help the U.S. economy as much as they want, as much as they can. So if we get a complete fallout on the GDP, the markets are initially going to dip, and this is going into Friday, obviously on Friday morning before the market opens, but it will also bolster the case for a sharp rate cut, which is going to be in the range of 50 basis points or half a percentage point. So just keep that in mind. The GDP number on Friday, very, very important. The rest of the numbers are important, such as the PMI, the inflation number, and the rest of them I've already explained. Let's move on. On top of the economic picture, which is very important, as I've explained, we are in the thick of earnings season. We have literally a quarter of the S&P 500 companies reporting earnings this coming week between Monday and Friday. So it's going to be really busy, no question about it. Some names that we already know, like Tesla, like Amazon. You got those are on Wednesday and Thursdays. We have Biogen on the biotech side on Tuesday. I'm kind of just scouring through the list here, names that stand out. We have give me a second. Then we have a bunch of banks, lesser known ones. We have Blackstone. No, forget Blackstone. We have Edwards Life Sciences. That's a biotech that we have been making money on, which moves up very sharply at times, sometimes just moves sideways. We have Anthem Health coming up this week. We have Lockheed Martin. These are the ones that I'm going to be playing, so you'll be getting those lists as we move along during the week. Lockheed Martin is something that I would certainly like to play on the earnings side. I mentioned Edwards Life Sciences. We are going to be looking at companies like iRobot. We are going to be looking, and these are earnings trades. We will be looking at big behemoths like Visa. That's after the close on Tuesday. Then we have Alexion Pharmaceuticals. So lots of pharmaceuticals coming out this week. We play that, so we'll certainly be keeping an eye on that and playing a little bit of that. That's a swing trade on top of that. We have the big blockbuster Boeing on Wednesday before the open. Now Boeing has been moving up very sharply. Based on my charts and stuff, people who have been trading Boeing are doing quite well. So Boeing comes out on Wednesday, and that is going to be something that's going to be very heavily watched. In the meantime, what you're seeing behind you on the screen, as usual, is the S&P minis, the E-minis. This is what the structure looks like at this point. This was the previous high that we broke through on the 2nd of July, right there. Came back and retested it, made a new high, came back, and now that we are retesting that same level again. This line here, as you know, is the previous all-time high. No, the previous all-time high was here. I'm talking this was the breakout of the all-time high that was printed on May 1st. So you can see the structure happening. Nothing to be alarmed about from a technical standpoint. On the daily, we are getting quite oversold. We are not fully oversold yet. We could slip and slide towards this red line here, which is a mini gap. That's at 29.57. So we are at 29.87 right now. I'm sorry, 29.76. So if we do slide towards this red support line at 29.57, that means we are going to be down by another roughly 20 points. 20 times 7 is roughly about 140 Dow points. That's a quick way back of the napkin calculation, how much the markets can pull back. We have a sharply uptrending 34-day moving average at 29.40. We have the 50-day moving average, which is, if you squint your eye, you can see it's starting to slope higher. The crossover happened on the 9th of July. We have already covered that on the previous webinars. And so far, so good. It is still looking like it's a rising wedge. Mentioned we would have a minor pullback. We're getting that, starting on the Iran tensions that happened on Friday at 3 p.m., 2 p.m. Market sold off rather sharply on that Iran has seized British oil tankers. Oil shooting up. Oils are up about 1% right now. That should be good for our EOG to start the day. That was recommended with those very cheap calls around 35 cents, 36 cents. Currently, we are in a bull flag pattern, and that bull flag, unless something really breaks below the 34 and the 50, should resume its upward trend and resume its primary uptrend, which is this. You can clearly see that. So just wanted to deviate a little bit from that as we talk about earnings and such, keeping everything under context. So as I told you, Boeing on Wednesday before the market, very, very important. Overall, unless Boeing shoots up 10, 15 points prior to that, it's still got room to move. You don't want Boeing to make a moonshot, no pun intended, okay, and then have a crash landing, again, no pun intended, right after earnings. You want Boeing to stay within the framework of the Boeing charts that I've been showing. You can find that on the Twitter feed. Take a screenshot of that, and we're good to go. If Boeing shoots up towards 400 for whatever reason, close to 377 after being up double digits on Friday, it means that it's probably going to pull back after earnings. So we need Boeing to be around this level, give or take a couple of points, so we have more upside left. That's just the way the game works. So that's it. We have Align Technology. Now the stock will be playing. Going into Thursday, we have, I'm just looking through the list here. There's so many, it's not even funny. Let's just keep it this way. I named some big behemoths for you guys, so keep in mind that those are the ones that the markets are going to be looking at, aside from many others. There's Starbucks, there is Proofpoint, cybersecurity company. There, I told you about Visa. And we have McDonald's on Friday. Love that company. That should be good. So that's it. So that's your earnings picture. You can always find on your own. You can find the list of earnings coming out, going to the NASDAQ site, or I subscribe to 2 different services for my relevant and timely information, breaking news and such. So briefing.com is one of the best. Benzinga is fantastic, and you can certainly find it there. So that's it. So the long and short of the story is nothing wrong in this picture. Yes, we can slide another 100 to 120 points, pull back things down a bit more early part of the week, and that's just the way markets are. Now, individual stocks will act very, Amazon, boy, we have no idea what it's going to do. It could be down 100, it could be up 100. So we play the straddle. That's just the way I do it, right? We did that with Netflix, and it was a winning trade, as you all know by now. On a shorter term basis, if we go on a 1-hour chart, we are deeply oversold. We should hold support at around 29.63, which is roughly about 50 points lower. Here, you can see that. I can bring this red line towards that, or 29.55. That's roughly about 20 points lower from where we are, 20 times 7 to look to see what the Dow Jones would do. You're looking at roughly about 140 Dow points. It could happen. It could happen. Now, the breakout level on this is pretty much where the market touched on 4 p.m. on Friday. You can see that right there. You can see that right there. And that's the big inverse head and shoulder cup breakout and all that good stuff. right? So right there, there's your breakout level of this move. Markets are very methodical, algorithmic high frequency trading. Computers, they go by binary numbers and exponential numbers and blah, blah, blah. So they're not like humans changing their moods every 2 minutes. They're worse than humans. They change their moods a lot faster, but they do it in numerical patterns. And that's why we can predict based on these tactical charts what we might be doing or not doing. We are still in a head and shoulder pattern. That's a bearish pattern. There's your head, there's your left shoulder, here's your right shoulder. We got exactly towards the right shoulder, like I said, on Wednesday, and we had a rally on Thursday. We got back on Friday morning towards that right shoulder, as you can clearly see that. Remember, the head, left shoulder, right shoulder, and there's your neckline. We break that neckline, we're going to go lower. Just the way it works. Nothing we can do. Okay? So we have to be prepared. Now, this is a very important chart. This is the Gann box that I've been showing. I want you guys to focus on it, whether you're an active trader, non-active trader, emotional trader, doesn't matter. You got to watch these things here. This is what happened at around 3:45, the big sell program that came in on the Iran thing, which started at around 2 o'clock, around there, when we were at the 50% level of the Gann box. That's 0.5. You can see that, all right? So till then, the market was basically, kind of like going back and forth. The market started the day on Friday at around here, and there was a big sell program there right off the bat. Then it started to move up sharply and then gave in on the Iran news, oil shooting up. We got into EOG. Hopefully it pays the bills a nice way. So this is where we are right now. This was the close on Friday. And this is where we have actually climbed to since Friday's close. Friday's close on the E-minis was 29.60, 29.70. We went as high as 29.80 just at around 7:45 p.m. Eastern Standard Time today. And this is where we are right now. A very structural chart, as you can see. Lots of volatility, big moves up and down. And these charts will help you put this thing in a framework. And of course, I have all my other charts that I show it to you guys, so you have to basically just get used to looking at them. There's no other way. Let's take a look at the daily. The daily right now, this is the daily chart of the E-minis. What can I read from this daily chart? Because predictive forecast, we have been very good at it overall. Cannot tell you what's going to happen every 15 minutes, but certainly have been dead right on what the swing forecasts have been on the market and individual stocks. You have to maintain volatility by getting more efficient and skillful at trade management, and there's nothing around it, okay? Just because you have one down day and your P&L looks red means nothing for the following 24 to 48 hours. I've proven that over and over again. If we want to look at this in a simplistic way, we can say that, okay, the market can still come down to about 29.7. This is the daily futures. We are at 29.76. We're at 29.75 right there. We could easily slip and retest it towards the 29.50 level. I just talked about that a few minutes ago. Now, this is still looking like a bull flag. You can see that. If you draw it like this, right? This bull flag can extend itself. This is what we call consolidation channels. By now, you've seen it hundreds of times. This is where it gets tricky. Do we have an idea whether or not it's going to come down here, retest the support level, and then bounce up? My bets are yes, it will, based on many other things that I see on my charts. However, if the stochastics, which are now resetting very quickly, these stochastics started resetting within the past just 3 or 4 days. Now we are heading towards that oversold zone. Will it hold the 20 level here, 20.63, or will it come down below that level where it gets deep oversold? We don't know yet. However, once it starts to get down towards this level, you know what happens. Either it slips and slides if it's going to go into a protracted pullback for a bunch of days, which I doubt for a money management reason, Wall Street money management reason, which I'm going to explain in a minute. Many of you already know what I'm going to say. It's the last couple of days of the month, and what happens in the last couple of days of the month? Well, I'll tell you in a second. So bottom line is that we are getting quite oversold, and that's what we want to see. We want to get cheap prices to play the reflex reversal bounces. If it slips down here, that means we're going to come back and retest. We're basically going to be falling another 100 points. Retest this red line here, or this was the brick breakout, this big green line. By now, you guys should be able to read these things very easily. So, sorry about that. So basically, right there, and now this was the big breakout line, right? And what was that again? The green line was 29.62. Now, why is this also important? We have a lot of new members. It's important because whatever happens with on the background on the SPYs generally and the E-minis, it generally going to affect what you are trading on the front side, especially stocks which are the big name stocks that move with S&P 500. I'm not talking about specialized situations like CrowdStrike, which was a huge earnings winner, like Beyond. By the way, that's coming up. Beyond Meat is going to come up with earnings this week. That should be a mover to the upside, in my opinion. Who knows? And one second. And sorry about that. I was trying to see what something was ringing. And then Boeing going its own way. The HMOs hopefully will deliver strong earnings. They have much more room to move. The Humanas, the Anthem Health, United Health, which was selling off sharply after their earnings, sharply meaning just a couple of points, but still. So bottom line is that I'm monitoring this very closely to see what happens. Is it going to slip and slide lower, which means things are going to get quite cheap, or is it going to bounce at this level, which it did back on the 7th of March? You can see that? Or will it be doing this? If it starts to curl around and the crossover starts happening, you better get long real fast, real hard, and make some real decent money. Each of these moves can last anywhere from 24 to 48 hours. Don't expect these to, a lot of retail traders, I don't know how many of our members think like that anymore, because I keep on trying to reprogram their mind. Nothing goes up in a straight line. The markets come a humongous amounts of points since December 24th. And in this particular case, the most recent, June 3rd. June 3rd was the last real low in the market. March was the other last real low in the market. The real low in the market was December 24th. But it's come a long way. But does it happen in a straight line? No. It's just the way it goes. Okay? But pro traders, a lot of them still keep on thinking that, oh, it's just going to be a straight line up. No, it's not. It's not. It's not. It just doesn't work like that. And even these huge green candles, 500-point type of days, even within this day, there were lots of ups and downs along the day. This is how it ended. So we are going to see whether this bearish engulfing candle that happened on Friday is going to be the start of a pullback for another 100 to 200 points. We shall see. So I'm not going to be a hero. I'm going to follow my technical charts. I'm going to let you guys know and then do what needs to be done. Trina, am I making sense?
Yes, you are.
Okay. So I'm just trying to barrel through a bunch of stuff without, going too long-winded. The next chart that we can look at is the weekly chart. I'm kind of zooming out. And the weekly chart looks like this. This is the sort of the unstructured version. This is the structured version. This is just showing you the rising wedges and the uptrend lines and stuff like that. This is where we are right now. On the weekly, it's still very much of a bull flag. If whatever hits the fan and things like there were terrible earnings from most of the company. By the way, 77% of the companies that are reported so far for the second quarter have beaten expectations. In other words, beaten their numbers. Not bad, not bad, because overall, the bearish sentiment on the market is very high and analysts are predicting a terrible earnings season. So even if the majority of companies just beat by a little bit, the market is going to continue higher because most of them are positioned bearish. So saying all that, still looking like a bull flag. And if things just really start to sell off, we can go to the 2,900 level like we did back in May. And if we fall from where we are right now, which is 2978, down to 20, down to to retest this uptrend line or the lower wedge, right? That's 50, let's call it 30 handles on the E-minis. That's roughly 210 points on the Dow lower to create this large consolidation. We shall see if that happens, but just letting you know. Now, it probably won't be a straight line, like one candle can do it like that, but most probably it'll zigzag its way down here and then create a massive buying opportunity where you can play the swing side and hold things for a bunch of days, if not a week or so, because these things normally happen within a matter of 4 to 5 days. So we shall see. But I'm just going to showing you this picture. The more structured chart on the weekly, which many of you have who are a little bit more focused than others have seen, is not the weekly wedge, but the ES weekly. Now, the ES weekly looks like this. This is more structured, lots of lines, support lines and stuff. And as you learn how to read more charts, it becomes like second nature. You're going to see nothing's really wrong with the stochastic. Still moving sideways over 80. Good to go. Not a problem. Once it curves down sharply, that's when you want to leave town, but not necessarily leave town. You want to basically lessen or get out of your long positions on the ones that are moving fast lower. Take that loss if need be. Buy some SPY puts. That's only if these lines both cross over on the weekly like that. This tells us that for at least 4 to 6 days, we are going to be pulling down. Even though intraday will attempt to have these reflex bounces, the machines will sell them. That's only if the technicals break down completely and we go like this. Because even when the markets pulled back quite sharply in the month of May, it didn't happen in a straight line. Came down, tried to rally 100 points, came down, tried to rally, then gave in. But the overall trend change, change in trend, CIT, would be reflected in the stochastics. Same thing with stocks. So far, nothing. Still technically fine. So far, we have a red line here showing us on the weekly I'm talking about, showing us where the support level is. That's at 29.45. But visually, you can see what's going on. This green candle is what is happening right now with futures up about 1/4 of a point, but we are up more than 10 points from Friday's close, just so you know. I'm not sure why it's showing. Maybe it's the cash settlement and stuff. I don't want to get into it. But I showed you on the Gann charts that we closed here on Friday at 29.70 roughly, and we are here right now at 29.77. So net, we're up 7 points from the close 4 p.m. on Friday. Yet the futures, if you look at it, and this is a futures chart too, is showing we're only up half a point, 0.50. Now, if we follow this pattern, we're going to basically climb overnight, fall, and then take off. If it follows this pattern, let's see. It's starting to look like that, but we can't always trade based on what it looks like. We have to monitor these things. This was a sharp sell-off too, and this was only last week. So that's what it is here. Then it kind of waddles around, bends momentum, makes a sharp move, and that sharp move, if there's a real sharp move, just concentrate on the blue dotted line. That's your 50% retracement on the Gann box. Right there. That's going to hit major resistance. It broke out of that, took off like a rocket. Broke down below that, fell. That's why these Gann boxes are important. You don't have to be a real technician. Just focus on it visually. That's all. All right, going back to the weekly chart, this is what we're seeing. So nothing really alarming. Upper end of this thing on the upper Bollinger is 30.36. I still think the market has power to get to about that 30.36, 30.30 S&P level, 30.40 level. And it's going to happen very quickly. And then at that point, I think we have a sizable shorting opportunity. And that might happen by the end of the month, which is 7 trading days away. Remember, it's not calendar days, it's trading days. So 1, 2, 3, 4, 5, 6, 7, 8. We have 8 trading days between now, starting tomorrow, to the 31st. So that's basically it. Let's take a look at the sink or swim version of what is going on. Let's take a look at the daily. It looks like at this point, if somebody's just completely following these, that we need to get oversold. That means we're coming down at least another 100, 200 points. Not every stock's going to come down, but talking general market. Boeing itself on its earning, if it drops initially $5, can bring the market down 50 points on the Dow Jones. Just keep that in mind. Let's take a weekly version of this look. And this is where we are. There's really no change on the weekly. No change on the weekly. This is still looking pretty damn good. Moving sideways, just the way it did here back in 2019 after the debacle and the massive Christmas Eve massacre. Markets went up and then kind of moved sideways and kept on going. Yes, we had 1 week, it was a down week, it just kept on going. Is it possible that it does that? Sure, it's possible. There was some good news out of China this weekend. It looks like the U.S. administration is talking about relaxing some of the restrictions, and they'll be hearing from the tech guys tomorrow. Washington, D.C., they have summoned the big tech guys, including all the semiconductor companies which sell into Huawei, the big Chinese conglomerate that we have banned from doing business with. And President Trump is playing the Trump card. It's a negotiating tool. They're going to give, they think they are, it looks like U.S. companies would sell billions of dollars of networking equipment and chips and specialized stuff to Huawei, and Huawei sells to us many advanced networking gear, which are deployed in rural America. Lots of Huawei equipment is deployed through there because they need that specialized equipment to get internet and broadband services to rural America, which is very important. And it looks like there's going to be a little detente, which means the chip stocks are going to fly. That's why Micron's doing so well. All right. So that was one piece of good news, that they're looking to relax some of the restrictions on sales and doing business with Huawei. The second piece of good news was that it looks like lots of Chinese importers are appealing to the Chinese government for tariff exemption, just the way our companies appeal to the U.S. government saying, hey, please don't put tariffs on these raw goods that we need from China to produce the products and blah, blah, blah. The Chinese guys are appealing, putting in their applications for tariff exemptions for U.S. agricultural products. President Trump has promised us, since his meeting with President Xi, that they're going to buy substantial amounts of agricultural products from the U.S., which the farmland would, it'll be like a lottery ticket win for them because they are just hurting badly. Their biggest customer we're in war with, right? Economic war with. China buys tons of our agricultural products, from sorghum to soybean to wheat to corn, you name it. Beef, like you name it. So if the Chinese importers are applying to their government saying, please, remove the tariffs on U.S. products coming in, well, I think the Chinese government is going to start doing it. That is going to be a huge boost for the overall market, a more positive, hopeful sign between some sort of start of negotiation. And if Steve Mnuchin and Lighthizer and what's his name? What's the other guy's name? I totally forgot. The Hawk, Peter Navarro. If they said they would be setting up a date to go to China, markets are going to love it. And we're going to head right to where I said we're going to go to, which is 30, 40, 30, 50, around that level. All that is going to happen within the next 7 to 10 days. Give you the bigger picture, guys, Lots of good things can happen. I don't know what bad things can happen in the sense that there's so many bad things. The only thing the market is fixated on, please give us a rate cut. So we need that 25 basis point insurance cut, and the Fed gives us 50 basis points. Boom! The market's going to take off. Then boom! It's going to sell. We're going to be ready. Are you guys going to be? I'm going to let people know what to do. Got to act. We get a 50 basis point rate cut, or half a percentage point. The markets will be up 400 points the next day. And then immediately start selling initially. That's it. The two other charts that I want to show, don't want to get into it too deep. This is your McClellan oscillator, the NIMO. This was Friday. We are closing at around 18. If we slip and slide and there's further deterioration, we are very oversold in the stochastics, mind you. But let's say we slip and slide more. We fall that 200 points I'm talking about. We're going to get down towards that 40 level. And you know what you need to do. By now, you should know it. You literally buy some good stuff, hands down, and make some real decent money within 24 to 72 hours. Because once you get this oversold, everybody is already panicked. At this point, they will be panicking hard. But for now, this is where we are. We have come to this level before and come up, so let's see what happens. This is what we're seeing on the McClellan oscillator. We are at S1 on that. Stochastics are quite oversold. If we start to turn around, we're going to have another sharp rally. We can fall another 200 plus points, then we get oversold towards that minus 40 level on the oscillator. I just told you, you gotta buy. It's never been wrong. Never. There's always a reflex bounce worth hundreds of points and hundreds of percentage on ROI percentages on options. Mike, Trina, you with me so far? Yes? No?
Yep, I'm still with you.
Excellent. Now let's take a look at the S&P 533. This thing is getting oversold. Not fully there yet, mind you. Once it gets really oversold, it starts to get towards this level. I'm not saying the S&P is going to go to 2780. I'm just saying this. Look at the lines on the stochastics. The histograms now have gone into negative territory. If they start to expand lower, that means we are going to fall, like I said, another 200 to 300 points. 2960 seems to be the level that I'm watching. You can see that. And this is your midline 50, 80 level right here, 2960. We are close to 2960. That's 16 points from where we are right now. What did we close out on the S&P on Friday? We closed at 2976. Okay, 2977. If we fall to 2960, which is a major support level, then we are 17 points below where we closed that on Friday. 17 points times 6 is roughly about 110, or 7 is like 120 points or so on the Dow. We could fall. If it breaks this, we gotta watch out. If we break 2960 or 2955 on the S&P 500, there's going to be a vacuum created. There's going to be a lot of stop loss triggers going off. You know, the fear level is going to start to go nuts. Markets are going to fall. So it's going to be a very interesting week. Earnings, all the economic numbers, and that's basically it. So I'm going to wrap up right here. You know, we have lots of different types of stocks that we trade. But if I want to warn all members, it's a helpful warning. Do not be complacent. Do not be over terrified, because that's when you keep on moving every single great opportunity. Earnings are going to be volatile. Some are going to go through the roof, like many of ours have done. Whether it be eBay or CrowdStrike or Microsoft, it went through the roof. Seattle Genetics, SGEN, some will go the other way, some will come down the other way and then reverse and go nuts, like PriceSmart, that went up almost $15 from being down, and the calls went up a gazillion percentage. That's the market, ladies and gentlemen, and hope you guys are learning it the right way. It is earnings season's always tricky. Then we have all this economic stuff to deal with. Fed rate cut, the most critical component, but that's on July 31st. On that note, let me wrap up. It's been a long and exhausting weekend. It was 115 degrees on average for about 24 to 48 hours. Things are starting to cool down. And I am going to be very active in helping you all navigate the markets to my best ability. You guys decide what you want to do. On that note, God bless you all. Believe in American exceptionalism. Believe in our US companies delivering the results. Believe in our administration to cut a negotiated deal with China. Believe me, we need that. Believe in our farmers to get some relief from the parched plains where there has been no rain for weeks, and and the heat is just drying out their fields. Let them sell billions of dollars to the Chinese who want to buy it. Let's get it moving. Have a great evening. See you guys tomorrow morning.